Respected CEO Sir Das Sir, our guest speaker Ramesh Sir, Director Training Merodra Ji, and Director Academics Dr. Muralidharan, faculty members. So I have joined Kanchana Ma'am, Arvind Verma Sir, and we have PDC heads with us, Govind Rajan Sir from Chennai, Subhashish Sir from Calcutta, and we have Thiruma Vallavan, our Deputy Director and my coordinator, my colleague, and dear participants. We are very pleased to inform you that our guest speaker has joined us, and warm welcome to all of you. We are very honored that Sir has accepted the invitation, and he is addressing the participants for the Leaders Speak series, which is a monthly event. And the topic Sir has chosen is challenges faced by banks due to growing competition from NBFCs and Fintech companies, a need for a collaborative approach. So, sir, before we start the program, I will just tell you about the program. So, this is a 11th batch, wherein 86 participants are now enrolled. And sir, this is a 10-month program, a long duration, just like Executive MBA. Wherein 9 months we have sessions on weekends. It's a hybrid mode program, and 1 month we give for project work. And so we cover a variety, almost all the areas of the banking domain. We cover we have semester-wise system. We cover credit management. We have monitoring. We have NPA management. We talk about the laws, Indian laws applicable to the banking industry. We have international finance. We also take sessions on soft skills, ethics, and international skills. And sir, the most important highlight is that we have a collaboration with IIM Calcutta, wherein we take the people to the campus. So it is a hybrid program, and we also have an immersion program here in Bombay, which is planned this coming January, February, and Calcutta, sir, we are going October and November. So, sir, this is the program, and just the participants, we received a number of nominations as well as self-sponsored candidates for the program. And this year, sir, we have 86 people who are attending the program in 2 batches. So we have people from Bank of India, Central Bank of India, Punjab and Sindh Bank. So we have people from RBI. There are private sector bank people also, sir, and we have from normally we get from cooperative banks also. Saraswat Cooperative Bank we get, and sir, Kotak Bank, so we have from Bajaj Finserv also. So sir, the almost 19-20 organizations people are today in this program. So when before further going ahead, I'll just give a brief profile of our guest speaker. Ramesh sir is a strategic planner with comprehensive managerial acumen, offering a varied experience in banking and is excelled in every assignment, creating high performance organization. And he has a deep analytical skills. He has managed crisis effectively, strong abilities for goal setting, and he has high stress scenarios also he has seen with under tight timelines he as well. He is a postgraduate in commerce from Andhra University, and is a CIB from IIBF. He has expertise in international factoring with hands-on experience in handling payment and settlement systems. And he has also passed diploma in international factoring conducting by Factors Chains International, Netherlands. So prior to joining the bank, KVP as MD and CEO, he was a Deputy Managing Director and Chief Operating Officer in State Bank of India, and has experience of developing and overseeing the retail business and banking operations for more than 21,000 retail branches and 120,000 touch points of the bank's ATMs customer service points successfully. He has extensive experience in redressing pain points in customer service related areas and furthering financial inclusion, actively leveraging the services in business correspondence in SBI. He is actively involved in direction setting and policy formulation by participating in various apex committees of State Bank of India. He successfully headed the whole business operations of 1,300 branches of Chennai Circle of SBI for 3 years, and has a good understanding of business dynamics and management. He has also vast experience as a director on the boards of 5 associate banks of SBI and NYT on the boards of non-banking subsidiaries. And he has been MD and CEO of the bank starting from July 2020. Sir, a hearty welcome to the program. I would now request our CEO, sir, to please give a welcome address.
Thank you, Ravita. And Welcome, sir. Ramesh Babu garu.
Thank you very much.
Privilege. It's a privilege on my part to welcome you here. And whatever Rabita has now read out or spoken, I am the person who have experienced this, how you have performed. And it is in the fitness of the things when we are trying to prepare the future leaders, they should listen from the leader direct. Instead of the knowledge getting from the book, when they will listen to you, they will see you, and they will understand that how the leaders function. So the problem here is that what we feel. Generally, the BBB starts this leadership program after GM and above. So this is a program which creates the leadership pipeline in the banking industry. It's the 11th years of success. And the last time, most of the people who have joined this AMP program got promoted. In the last convocation, they have told that the program has helped us to develop as the bankers. And this is one of the highlights of the program, that we interact with the leaders. We try to bring the leaders from various walks of the banking, and they interact with the participants. And the topic you have chosen, I don't think there will be any contemporary topic for the candidates or the participants here. So two things which is changing the shape of the banking is technology and competition. Whether it is technology or competition, the center is the customer. And who else has done better customer service as the DMD and Co and Chennai Circle CGM? And just for the information, my participants, when he was the Chennai Circle CGM, managing the circle, and the flood happened, the Chennai flood, the famous flood happened. And believe me, within 2 days, every branch is up working. And the CGM himself, I think, sailed in a boat to reach out to few of the branches, just to give them moral support. It is not that what you speak, it is how you act as a leader. That is more important. And he always walks the talk. That is his advantage from the beginning. I have been seeing him, since 2010, when I joined the corporate center. And I can vouch for this, that whatever he will speak, that is the truth. But the entire thing, it will come from his experience. Entire thing, he will bring it to you, which he has experienced himself and succeeded. So coming from a public sector bank like State Bank of India and coming to a private sector bank, that is also a change. So the change management, how you change yourself in various positions, at various situations, various places, that is also important. So he has shown this, starting from associate subsidiary, starting from heading Chennai Circle, being the head of the State Bank operating officer, various positions. Now as MD and CEO, perhaps the bank is having a qualitative change slowly. So it is now visible. So he has now been also inducted in the IBA Managing Committee. So congratulations from all of us, sir. And I leave the floor to you. I think the participants from various banks at the senior level will be immensely benefited by your interaction. Thank you. Welcome.
So nice. First of all, thank you very much to the IABF chief, Mr. Das and Mr. Ravita, for the kind words. Absolutely. So, in fact, the program is the leader you mentioned, but I have to modify myself as a learner. Still, I'm a learner, learning many things even today. So that is banking and all. It's a big ocean. First of all, nice of you, the way what the program is conceived, and so the time what all is available. I'm really doubtful whether we'll be able to cover many of them, but whatever is possible, I'll try to cover it up and all. So first of all, before I start about our topic and all, let me talk about Mr. Das. I know him. He's a good friend of mine, and he is also a pretty doer and all, and has a lot of focus and all. So the attraction for me when IABF call has come is Mr. Das. When he said, you cannot say no. So that is his goodness, the way he maintains the relationship with others and all, how he is taking the IABF forward from the sidelines. When we look at it, it is quite satisfying, and we feel that. So why we were not youngsters to have these sort of sessions and these sort of programs from IABF? When we were youngsters and all, we were only doing these CIB, these sort of things. Now how the bouquet of products what IABF is offering, which is quite contemporary and providing so many inputs and insights which are relevant. These things, if you look at it, how blessed the current generation is there, and how IABF has actually transformed themselves along with what is the requirement and all. If you see all these things and all, you feel more satisfied. So coming to the participants today, if I look at it, so I feel that IABF's intention is to make them more confident leaders and to make them future ready. So that is the reason this sort of program, and with the finishing touch with IIM also, when you give it and all, you go and experience what an IIM is there and all. The fact that entering into the IIM campus itself and interacting with them is a different experience. Throughout our life, we can boast saying that I had a session in IIM. So that's what all these things they have packed so well and they are bringing it together and all. So my compliments and congratulations to the IABF and all the candidates and all. The curriculum also is so immersive and the 360-degree, everything they are covering out of this and all. So I feel that all the participants are taking full benefit of this. It's like a well. Well, the water is always there. It is for you how you are going to, how much of water you are going to draw out. If we are unable to draw out the water and all, we cannot blame the well. We have to blame ourselves. So that's what we have to keep in mind, how to make full use of the benefit of this one. Now, before I come to the topic and all, let me 2 minutes brief about what's happening in and around. So, Mr. Das was also mentioning about the transformation. When I have come from the public sector, 40 years worked in the public sector, when you come to a core private sector, and that to an old generation bank and all. So, it's a mindset change, these things are required. But once you come out and see that, there are many strengths the public sector also has, because the way they teach you and all, how you need to orient yourselves and all. Likewise, private sector also, if you look at it, there are many good plus points will be there. The agility with which move and the customer. So orientation, what all is there, this all differs. Why I'm saying this point is that if we have to succeed as a leader, how we are going to mold our team, because the reason is simple. Now the products are commoditized. Every product if you are trying to create, within a week someone else can mimic and create a product. The only thing which someone cannot replicate is the customer experience. That's the only thing. I can buy a TV, table, a building, interior, everything and all, but can I get the attitude of the people? So that is the leader's challenge, how he is going to mold the attitude of the people. Likewise, every organization, it has its own culture. The culture is very difficult to change the culture over a period of time, but leader should not adopt himself to the culture, what all is there, even if it's something wrong and it is not contemporary, it is not making sense with the expectations of the customers. So it is for the leader to think something differently and how they can bring a change in the mindsets of the team to adopt to the requirements of the customer. So Peter Drucker, what he has said, the power of culture he was mentioning, the organizational culture can eat the strategy for breakfast. The organizational culture can eat the strategy for breakfast. As a leader, you may have a very strong strategy, saying that, yes, I want to transform my organization like this and all. But the underlying culture in the organization is not supporting you. Your strategy is of no use. So first of all, we need to understand what is the culture, what the mindset of the people, how as a leader you are going to showcase to them. If this is a transformation, if you are not bringing, what will be the fate of the organization? So this is the primary thing a leader need to keep in mind. And the same point, I kept it in mind also when I have shifted from public sector to private sector. The bank, Karur Vysya Bank, is doing so well. And just to tell you, the 2022 profit, what we have earned is highest in 106 years existence of the bank. Likewise, June profit is highest in any quarter in 106 years. So that way people are doing well and all, which they were struggling and all. So it is a set of people who are there, whom we need to groom. We need to tell them what are the challenges and all, how we need to face them. If we do not address them, what will be the future? Are we going to be relevant over a period of time, or people will feel that it is marginalized? This bank also is there. What is the need of this bank? So leader's challenge is always to keep his team aware, saying that I have to be in the competition, I have to be ahead of the race. If leader can succeed on this particular count, the organization will be pretty good. So this is the basic mantra for the leader. Now coming to the banking, if you look at it, banking, the perception is undergoing a sea change now. So good days are ahead, it appears, because everywhere you must be reading this one and all. Because earlier we were facing infra-related issues were there, NPAs, COVID-related issues were there. And all these issues, the NPAs, everything has gone to the back burner. Many of the banks have cleared their balance sheets and all. In the process, the provisioning requirement has come down drastically. And stress is also under control because it can be for a variety of reasons. The bankers knew what sort of customer to be selected and whom they should not select. The customers also have become more disciplined, including corporate. They knew it. If I play with the banker and all, my existence itself will be at stake. So tomorrow I may not be able to hold in my organization. So with these two things and all, the level of the quality of the assets have gone up. So that way, so if you look at the current scenario, how RBI is raising the repo rates and all to contain the inflation, with these interest rates going up and all, the interest rates on deposits will not go up simultaneously so fast as it goes on in advance, because many of the banks, their advance portfolio around 80 to 85% is floating rate. So you'll be able to pass on that benefit of interest rates higher, and over a period of 1 or 2 years, your deposits will get repriced. So every banker will get the benefit of the raising interest rate. Their net interest margins will improve. So the opportunities are also going up, but the only question is how we are looking at the opportunities. The same opportunity, someone can look at it as an opportunity, someone will look at it as a challenge. If someone looks at the challenge and all, leaves it and all, he'll be missing the bus. But the opportunity is one way. If you look at it as far the country is concerned, the growing population, it is earning population, and reach through digital, the awareness going up, country is shining, and baggages are not there. The government is pro-development government with focus on governance. Governance is the main focus of the government. But with all these things, for a banker running a business, is it a cakewalk? Everything is on a platter? No, there are many challenges. Because the challenges are many, the competition is also going up. If you look at it, though we come to the NBFCs and the fintechs later, broadly, if you look at it, if you leave the commercial banks earlier also we were competing, now also they are competing. But few new set of entities which have come up in the last 10 years, 7 years, if you can look at it, are which have become active are small finance banks, NBFCs, fintechs. So now, if we feel that no, there should not be any competition. So we need to have our own cake and we must be able to eat it. So the question is, if there is no competition, I personally feel there is no progress. We will not have thrill also. If everything is routine going on and all, your mind also will become blank. So competition is a must. It must be there to take out the best from you. So that is the reason we should not crib about competition. We need to see how that competition you are going to convert into an opportunity. Suppose in a Sahara desert, will every bank go and open a branch there? They will not, because the opportunities are not there. If in a center, if many banks are coming and opening the branches, which implies that there is a potential and opportunity, and we are looking at only competition, others are looking at opportunity. So one more thing, what we need to look at it, there's a saying in English. What they say, God is like Wi-Fi. God is like Wi-Fi. You need the correct password to connect to the God. That is faith. If you have the correct faith, you will connect to the God. Likewise, opportunities are there everywhere. But you need the correct password, how you are going to connect to the opportunity. That is your outlook, the business outlook and the customer connect. These things, if you have properly, and how your ability you can showcase, saying that I can convert this challenge into an opportunity, opportunities are unlimited. So with all these things, with the current setup, can we continue? Somehow I personally feel if someone is a generalist, which 10 years, 15 years as a banker we were doing and all, we offer everything. I want to be universal bank and all. Everything in the world, what others can offer, I can offer. Good to offer under one umbrella to all the customers. But I feel each banker, they need to carve out a niche for them. I need to know what is my strength. If someone talks about our bank, they need to understand, I need to go to this bank only. The first right of refusal I'll give to this bank. There used to be a saying earlier when we were childhood. So the advertisement used to come like this. Whenever you see a color, think of us, Jensen and Nicholson. So they used to say, color, Jensen and Nicholson is equal to, whenever you see a color, think of them. Likewise, something you think of that one and all, you need to think of this bank. So first of all, through a niche someone enters, you can upsell and cross-sell and all, you can take more. If you are a generalist, so they may come or may not come to you. Because as I said earlier, products are commoditized. So this is a challenge for the leader to identify what is my niche. Am I a generalist? Do I have something in niche? People need to think of me for anything. So the differentiator for others and us has to be the service, the reach. Reach, when I'm saying it's not brick and mortar, it can be digital, whichever way is an omni-channel. So many channels are there. You need to penetrate straight into the bedroom or any office or any house of a customer. Earlier it was not so. Now through any channel you can penetrate. So we need to understand which is the channel, which is not intrusive, but we should not create a nuisance to him and all. And how I'm going to personalize. What is requirement? How I'm going to personalization is the main differentiator. If I am also offering all products and all, he may not show any interest. If you look at it, when we talk about the competition is there only in India and it is prevalent everywhere in the world. In USA, September 21 data shows there are 4,951 commercial banks and saving institutions. 4,951. In numbers and fingers, you will count the commercial banks in our country. And they are struggling with so many banks there. You mean to say that such an elite, known, literate customers are there and all. What is the need for so many banks? But each one, they have a niche. They are playing. So likewise, we need to live with the competition as long as we live in the world. That is the first thing we need to keep in mind. You cannot get out of the competition. So compared to our US, we are better off with lesser number of banks and all. So now, if you look at small finance bank, let us come to small finance bank. Small finance bank, we'll just touch upon and we'll leave them. Now the problem for them is they have a reach. They can reach the lowest strata of the society, but their cost of borrowing is pretty high. Because some customer wants to deposit money for the daughter's marriage after 5 years. There is an established commercial bank. There is a newly set up small finance bank. If he is standing in front of them, where will he go? He may go to a known commercial bank, it can be private bank or public sector bank. If the small finance bank is offering 1% more, where will he go? If someone is more conscious about the safety of his capital, that is, return of capital is more important than return on capital, he may come to still the commercial bank. If 2% more is offered, he may think going to a small finance bank, definitely, because he also needs some sort of a interest benefit. So they have their own constraint. They need to offer a higher rate to get out of all these things. Then the advantage for them, they have a reach. They know how to actually identify what is the lending opportunities, how I need to lend it even at a higher rate, who is needy of money. So that way, with a lending cost, they may not be able to take up a very low risk customer and with big volumes and all. So, but they have their own niche, they have their own drawbacks and all. The advantage for them is high risk, high reward. They'll take higher risk, the rewards are also good. Now you can look at the balance sheets of few of the small finance banks. When few public sector banks are struggling for a 3.25% of net interest margin, few small finance banks, the net interest margin is 9%, 3 times that of a bank. So how they're able to make money? The same customer is available in the country. Why bank is unable to do? They are able to make money with high cost of funds. So this is all we need to continuously see what are the opportunities where we can do. Now coming to the NBFCs. In India itself, there are 9,000 non-deposit taking NBFCs are there. Difference is the profile of the customers is different. When I'm talking non-deposit taking, there are deposit taking, I didn't include them. These deposit taking, non-deposit taking, they are not your competitor for the simple reason they cannot raise money. They cannot raise money which a bank can raise. Bank can raise money and they can lend. They cannot raise money. They have to borrow somewhere. It can be an NCD or it can be a borrowing from a bank or something like that and all. They have to lend. Naturally, when they are borrowing from someone, the cost will be relatively high. So we'll get a feeling why these sort of customers, when they go to NBFC, why not to a bank? I had the privilege of working even in the rural areas in the north also. When I go and talk to some customers, why are you not coming even for a gold loan to the bank? Even in Uttar Pradesh, the lady suddenly tells, Shaukar Haina. So Shaukar Haina. So in the sense that the local money lender indigenous is there, why should I go to a bank? Then I used to ask them, how much he'll charge you? 3% per month, 36%. So they want to pay 36%, but they don't want to come to a bank because they have a fear. It's an organized setup. Only class people can go there and all. If I go there, I may become a fool there. Instead, let me go ahead this way. 24 hours I can go and fetch, I can take the money and all. So these sort of many people are still there in the country. And NBFCs know the pulse and they can manage and get them into their fold. So that way NBFCs serve unserved and underserved. What they do? Unserved and underserved, which a banker, it is very difficult for us to do. So it can be a micro loan for small and self-help group or a joint lending group. It can be for SMEs. It can be affordable housing. It can be a gold loan or it can be a personal loan, commercial vehicles, construction equipment. Each NBFC, they have carved out a niche for themselves. They are not generalists like a bank. They will not say, I am an NBFC like a bank and all, any product you come and all you take from me. You see, many of the banks, they specialize in a particular line of activity. That is the reason their focus and strength is something different. So now, that is the reason which a bank cannot play a role, NBFC will be able to play. So, but if you look at few banks, they have internal structures are there. Few banks, they specialize in jewel loan. Few banks, they have a micro loan setup and all within the bank and all, they have a vertical, they'll handle that. Few banks are good, along with commercial banks, they finance the commercial vehicles also. Likewise, they are there, but it will be a part of their business and not the main business. So, for their customers, they will be able to do that. Now, the problem for NBFCs, as I said, NBFCs, they have to borrow money from the bank. When the banks are paying interest rate, they have to add the operating cost, negative carry. With all these things, they will lend. So when they lend, it can be 8%, 7.5%, 9%, whatever it is, depending upon the rating they will lend to an NBFC. So whereas NBFC is concerned, they have to add their margin because so much of operational cost is there for them. There can be delinquencies, there can be monitoring issues will be there. And down the level they have to go with all these things. They have to add all these things and still they have to make money. So many times their interest rate also can be 20-22%. But the end user, they will compare it. When compared to 36%, is it not better? Am I not I am paying on a reducing balance, whereas there I am paying continuously on my what all borrowing I have done that and all. All these things that make the difference and all. So they found out a niche, how to get someone out of the clutches of indigenous money lender, but it should be above the banker, which a bankers cannot handle, which a money lender, I can get them out. This is my core competence. This is where I can hit them. Huge population in India is there. Why I cannot do the business? This is the reason thousands of NBFCs are flourishing. I'll just give you an example. So hotel financing. Banker is concerned, he'll look at the GST data, balance sheet, this thing and all. And someone goes to an NBFC and he looks at them, he'll ask them, what is the cash flow? How much you get? How much loan you get? How are you going to repay? All these things they'll ask. What is the footfall? All these things he will tell. Then suddenly what he'll do, they'll go, let us say on Monday morning, 7 o'clock, he will go and tell the cashier, you empty your entire cash drawer. It is nil. I'll sit next to you. Let me see up to 9:30. What is your sales? They'll count at 9:30. He'll note down and go. Some other peak time he'll come. 2 to 3 times he comes. He has an estimate of the cash flows of the hotel. This hotel is earning this much, and that is sufficient for him. Based on the cash flows, he'll arrive at how much of loan he can give because he has a repayment capacity. Whether a bank can I do it? You cannot. You cannot do. Likewise, I was talking to another NBFC. How will you recover your loans? Spread over throughout so many areas and all, so many people, 100 rupees, 15 rupees, 50 rupees you are recovering. They say, sir, agreed, but we need to have our internal controls. But it has to be cost effective, but it has to be quite robust model. They said that we have a model called Chakravyuh. Chakravyuh. You see in Mahabharata, how we call Chakravyuh, their monitoring mechanism is Chakravyuh. What is that I told them? They took me to the control room. Then they said, we have a recovery agents are there, field persons. 15,000 rupees we pay. We'll give them a motorcycle with a GPS. And we'll give them a tab. And any borrower, whoever is taking a loan, we will give them pre-printed barcodes for 12 months. Then suppose if he goes there and on a particular time slot and all fixed, the system will give them saying that this particular village, such and such time you have to go. He'll start 6:30 in the morning and he'll go at 7:30 to this village, 7:30 to 8:30. Then all villagers know. They'll come and give him 100 rupee installment. It can be daily, monthly, weekly, whatever it is. He'll open the tab. They will show this barcode in that. And system automatically reads and it debits the suspense account of the field staff and it credits the borrowing account of the borrower. And immediately borrower gets an SMS saying that your account has been credited with so and so. So from that he is out. He has got the money straight by giving the 100 rupees. Now this man is holding the 100 rupee. Like with everyone, they'll show. And he starts moving to the next village. While going, if instead of going to the next village, instead of taking a right turn, he takes a left turn somewhere. Immediately the alert comes in the control room. He is running away with the money, with the GPS. With that alert, immediately the control room alerts on the way next police station straight. The police will catch hold of him straight there. And he cannot move forward. So that's why they have an absolute control on his movement. And evening when he comes, and no reconciliation. Because everything what he has received, the system is debiting his account. The system will show from X, you have to credit 5,300 into the bank. He will put that money into the bank and all, account is closed. That's all. If he keeps 5,200, 100 rupees, where is the money? So there is no reconciliation, nothing. Everything is simple. Evening he has to come. They say, this what I am talking, they have set up 4 years back. 4 or 5 years back, each NBFC, they have their own models like this. As a bank, can we have this? Very difficult. Even if you have, can you monitor all these things? Very difficult. So the NBFC is altogether a different entity. They know the knack, the trick of the trade, they know it and all, which it is very difficult for a banker to know. But NBFCs, if you look at it, so they have their own constraints because if they are growing, unlimited potential is there. So they need to bring capital. They cannot bring. And likewise, they need to borrow money from the banks. Banks will not be able to give. So then the problem is beyond a point, they may not be able to grow. So this is a drawback for an NBFC. Few NBFCs are big, like Cholamandalam may be big. I'm not talking about that. I'm talking about smaller NBFCs. Many of the NBFCs where an opportunity exists. Now, as a bank is concerned, I can also do the entire job. No doubt in it. As a commercial bank, if with so much of abilities, what we have, do you mean to say we cannot do? We also can do. But it's a costly affair because the expectation of the people, the bank what pays is different. And you need a minimum setup, brick and mortar, branches, all these things are there. So few banks, they operate as a NBFC, as a subsidiary of the bank. They cannot run, but NBFC runs all these things and all. They have the best of both worlds. The NBFC will be doing all the job. From the sidelines, they'll be doing what is happening. The capital will be given by the bank, and the bank with the NBFC will be raising the money and all. They'll be doing all these things. It's a blended model. Few banks will do, few banks will feel, why should I take this headache and all? Tomorrow NBFC has a big problems and all that may hit the bank's balance sheet altogether. So now under these circumstances, each one has a strength, each one has a weakness. The win-win is the collaborate. The collaborate rather than to compete. Compete, you cannot compete. So they also cannot compete with you. So they have their own weakness and all. How to collaborate? If you look at it, there are three models usually NBFCs look to support from the banks. One is the direct borrowing. They'll come to you, sir, I require 200 crores. Can you lend me? They will on-lend the money what you have given it to them. It can be 9%, 8.5%, 9.5%, whatever it is. So they'll pay. So for you, the advantage is you are taking a liability risk on only NBFC. If something NBFC fails, you will not get your money. You are nowhere bothered much about the delinquency levels. You will be monitoring 3%, 5%, what is the threshold you have given. But the micromanagement is not required for you. So there is a direct lending. Who wants a wholesale business and all, they'll go for that. And second model is there, a blended, a via media model is pool purchase. NBFCs have created a pool. As a banker, and I'll go and tell them, you see, my appetite is this. I want these sort of loans. I want this sort of quality. And they should have not become SMA at any point of time. The seasoning is 1 year or 2 years. And this is the quality or this is the type of activity. All these things will specify. They will carve out a set of loans from that pool. They'll give it to you. You will study how good they are, the quality of the portfolio. You will buy that pool. In that pool, entire risk is yours. If underlying pool, if someone defaults, the hit is yours. But they will be managing the pool. They will be the groundwork, legwork, everything they will do. For that, you will be paying them a management fee. And with an understanding what is the service level contract you will enter, and this much of service they will enter and all. But the labor is not with you, but you know on whom you have taken an exposure. Naturally, in the pool purchase, the yield will be definitely better than what the yield you are getting on directly lending to an NBFC. So this is an upgraded model over the direct lending. And the third model is a co-lending. Under co-lending, what you will do, you will tell them, saying that, okay, let us do it together. And if you are getting something, because under the pool also the problem for the NBFC is, first of all, they have to borrow money. They have to get the capital. They have to acquire an asset. They have to sell it to you. So if they do not have that sort of a muscle, but they have the inherent strength to feet on the street and they can run, they can mobilize business, they can follow up and all. So that initial investment they are unable to make and all, the concept which is prevalent now is co-lending. Under that, their systems and your systems are integrated. And both of you will have a common gating conditions and a underwriting criteria. Under this, you will tell them, this is my risk appetite. And these sort of customers I require and all. Then they'll put it in their system also, both of you, what they agree. And suppose a customer they are onboarding, they put it in the system. If it is meeting the requirements of what we are thinking, straight away that passes through the system, their system, it comes to you, it passes through your system, the sanction will go back, and suppose based on the agreed number, you say 80% risk you want to take. Out of 100 rupee loan, 80%, 80 rupees loan will be created in your books, 20 rupee loan is created in his books. So 80-20, in the process, he has a decent skin in the game. Because if some 100 rupees goes out, he will be losing 20 rupees. So 80 rupees may not be a big amount for the bank, but 20 rupees is a big amount for him because his margins are thin. So his 20 rupees, to protect that, he'll be running and try to recover the money. So you'll be paying something more. Suppose, example I'll give you, a 20% is a blended rate is charged to the end borrower. Now banker will say, I want 12%. 8% is for the NBFC. So 12% banker will give for his lending because he is taking the risk on the 80% also. 8% he is getting, and 12% automatically the company also, NBFC also will get for the 20%. 8% they'll get as a management fee because they have to engage people, borrowing, set up, establishment. All these things are there and all. Even if a banker has to run all these things, I somehow feel banker will not have ability. He may have to give 15% also. 15% they have to spend. So that way it is good for the banker to rely on them because they will speak their language. They can do what they want. They will recover the money. So now these are the three models which are currently going on in the move. And RBI also has brought out clear guidelines on the co-lending, what people need to do it and all. FLDG is not there now. That is first class default guarantee. If earlier, if the loss is there, up to some extent, first of all, NBFC will take. That will better them not to create more NPA because more and more NPA is there. First, they have to take the hit. Now, RBI said that risk reward need to be shared and all. So both of you need to take the risk and all. So the advantage now is, so banks can have the reach. They need not open branches everywhere. They will have reach because NBFCs all outlets becomes indirectly the bank's outlets, and they can spread the risk also. The advantage for NBFCs is without bringing capital and deposits and all, so or borrowings and all, they are able to grow together for the existing structure what they have created. Many banks, they have made their IT system much enabled in the process. Actually, in a straight through process from NBFC system, it is coming and going back and all. It is very convenient. In one of the companies in Chennai, they have created a platform. So Credit Avenue earlier, now it's called as a UB loan. They have created such a platform because each bank doing this one and inventing wheel will be difficult. They have created a mid-level layer wherein NBFC will plug in their systems to them and bank will plug in. Straight away, bank's data will go to NBFC through their system and all, it will come back. And all NBFC-wise customization, modification need not be done by each bank. Now, someone wants to enter into a co-lending arrangement, it will be pretty easy because the customization is not there. In intermediary, these sort of players are also coming now. So when you look at it, when I'm talking to them, they were mentioning they have 1,200 staff members. Out of that, 800 people are experts in AI and ML. AI and ML. So these sort of setups are also coming up to mediate between an NBFC and banks also. So that way, but only a few points what we need to keep in mind. When the interest rates are going, the earlier experience shows NBFCs, few of them will fail. The reason is their cost of borrowing will go up and they may not be able to pass on beyond a limit to the final end borrower. If they are already charging 20-22%, they cannot charge 28 and 30%. So naturally, they will be stuck when the cost of operations is going up and interest rates are going up. So we need to be careful while choosing a proper partner. The due diligence is very much important. Otherwise, there will be a long queue in front of the bank that I want to become. Now, the challenge for the banker is, am I choosing a correct partner and who is going to be there with me for next 10, 15 years? So the ideology, culture, and all these things are aligned with the banker. This is what we need to look at it. Likewise, in between, no one can assume the COVID types of risk comes. The NBFC customers are quite vulnerable. They can take a big hit. So we have to be mentally prepared when we are earning. This side also we have to keep in mind this sort of exposure we are taking and all. But whatever it is, if collaborative approach, if we take with an NBFC, I strongly feel it is a win-win for both of us because something you cannot do, something they cannot do. But both of you come together, it will be pretty good. Now, 10 minutes I'll cover on the fintech also. The chapter is so big. In BSc itself, so many things we can discuss because so many experiences are there. I need to share with you so that which will be useful in the field for you and all. But fintechs also I'll just touch upon. All of you know what is a fintech. Fintech is nothing but an organization which deals with the technology and innovation in the financial services they will do, and new business models they will bring, applications and processes, products, all these things they'll bring and all. So they use a disruptive technology. So it is not a banker. Straight away, it is not a competitor for you as far as lending is concerned, like an NBFC. But they use disruptive technology to provide customized products. When initially, when we were discussing, people, the customers, they expect a personalization from you. That customization makes a lot of difference. But the customization a banker will do, I'm not disputing that. But the customization has to come from a surrogate data and alternate data, which in a normal course not available to the banker. The banker is having only the information what all is there in his record. But there has to be an organization which is available everywhere in the world. You need to have the knack to get it out and how to take out some sort of a clues from them, how to personalize to the customer. So the world is become so data rich now and all. Now, if you look at it, by 2025, the predictions show the data will be more than 180 zettabytes. Each zettabyte is equivalent to a trillion gigabytes. So this much of data is coming. The data is properly used, it will be an oil. It not used, it is just a rubbish file. Rubbish file. So how best we are going to get from that and all, we need to see. Likewise, if you look at the PwC report also, it states that China, the fintech users are actually 83.5. In India, it is more than 55, 57% are there. If the users are going up day by day in India, if we do not partner with a fintech, which we cannot do, are we not going to marginalize ourselves over a period of time? Another point also, if you look at it, the average age of the young population in our country is 28 years. These people, they can very well understand. I'll tell you, a bank like KVB, the average age of my staff is 35 years. The country is 28. So you see how much of opportunity, adaptability is required and needed. Now, the age, current age, what we are talking is, people are talking about a programmatic TV. I do not want to see the normal TV. I do not want the advertisement. I need customized advertisements for me. What I require in my program, what I'm seeing, I want those sort of advertisements. YouTube gives you. YouTube knows what sort of advertisements you are giving and all. They give those sort of advertisements. Likewise, over a period of TV also may bring that. And virtual assistants are there, which will recommend which product actually you require and all. And digital call centers are coming up and futuristic banking. When I'm talking about a digital call center, now, earlier people were sitting and talking. I was talking to a digital call center. What they say, they have developed a software in such a way, the software can speak in 14 languages. And the call goes to the customer. And the call customers will say, so they say Namaskar. And the customer says Vanakkam. The software immediately changes to Tamil. The customer will not be knowing that he will be getting an impression saying that the customer service representative has seamlessly changed. It will go to Vanakkam and 25 minutes, 30 minutes that the digital will be talking to him. The other side customer will not be knowing other side is not a human being. Not a human being. That sort of development has come. Things are happening in India with those sort of call centers. This is a fintech offering. And many banks still we go with manual call center people and all. So when things are moving, the cost is coming down by 30%. The productivity is going up by 25%. This is an advantage for the bank. If you partner with a fintech and all, the banking is futuristic, it's going up and all, how we need to see it and all. The bankers now, whom we need to deal with the days to come, they are all internet, Netflix natives. They are not coming and all saying that routinely what business I require. These sort of customers, if you need to acquire, you need to be a shade ahead of others. So they expect a low friction customer experience and real-time decision making. Do we have that ability? Even if you have the ability today, can you sustain that? Are you able to continuously upgrade yourselves as per his expectations? Because the customers are expecting hyper personalization. And where We need to know the customer lifestyles, their values, aspirations, mindset, convenience, all these things on an ongoing basis, we need to know. The advantage for a fintech is they can create an access to you. Digital access they can create, speed, their nimble-footedness, and above all, the tailor-made solutions they can bring so easily. Because they are not a banker, they are not carrying a baggage. They will sit, focus, they will develop that. So when the world is moving towards a zero-touch world and contactless payment, as a traditional banker with a traditional approach can be survived and without partnering with these sort of a digitally savvy institutions. Now, and the customers are expecting this sort of personalization. So what we need to do? As a banker, with the data what all is available, I can cluster my data. I can do human-centric and what is so-called design pillars, AI, ML, all these things I use it and all. I can bring out something to address the issues of my customers. Earlier, what bankers were doing, bankers were relying solely on a brick and mortar. The customer comes here, I'll market what all my products are there and all. Now, a bank like KVB, 94% of my transactions are passing through digitally. Only 6% transactions are happening in the branch. If I have to offer only to 6%, how I am going to touch my 94% customers? I will not be. So 94% is more important and 6% is important for me. So I need to touch this 94. That is more important. Now, people are integrating the digital technology with their core ecosystem and traditional banking to give a better experience. So if you look at it, banks too are investing. Any big bank or small bank, they have to invest in technology. Without investing in technology, there is no future for them. That is known to everyone. But the investment is the right investment. It is going to get me the yield what I am supposed to get. And for the sake of fancy, am I using my AIML? Can I upgrade my AIML continuously? All these things is a challenge. So people, when we talk about AI, ML, robotic process automation, all these things, the world is moving towards the next level, that is hyper intelligence. Hyper intelligence. The intelligence is moving towards the hyper intelligence. Are we going to get that? Likewise, are we going to have a predictive analytics? The analytics what we are doing on the past data. So now banks as well as everyone require after 1 year what is going to happen with this customer. What I can offer in his lifetime value I'm going to create. So all these things are required. Another problem for the bank is bank needs to invest a lot in the compliance related investment for doing all these things. So that way that will be a very costly affair. So few banks, that is the reason what they are doing, either they are creating a digital bank separately or they are creating only a digital only products. The product is only digital only. So that's what they are trying to do. Next, what the development which can come up is voice first banking. So over a period of time, maybe next few years, 50% of the transactions may move towards voice. How towards face reading, how things are going on now. Now, tomorrow onwards, you'll be able to just give a command. How people talk about Alexa with open banking, what people say. So Alexa, transfer this much of money. Siri, this much of money. It'll go. So likewise, people want that convenience. Who is interested in logging into the mobile app, internet app, all these things, and no one will be willing. So they'll just make a command when they are somewhere doing something else and all, system will have to do. System will have to do. So this is what moving and all. So I am very sure 50% may move because I am telling you this point. 2 years back, I had an occasion to go to California and we were meeting some sort of fintechs and all there. And from a group, they made us to one of the boys, one of the candidates participants, they gave us a headphone. And the experiment, what they were doing, more than 70%, 80% accuracy they have reached is, they were telling that boy, that our colleague, okay, this is your banking site. You just imagine in your mind and all, what is your login ID? That man felt this is my login ID. It has appeared on the screen. They said that what is your password? He remembered his password. In dot, it has come on the screen. They have entered into the site. So people, we are talking about voice first. People are trying to move from reading the mind. The reading the mind system automatically or monitor will work accordingly. So people experiments are going on. Can we do all these things? Leaving our core banking aside, can we do all these things? So this is what we need to think. Now, advisory, as I said, robo advisory going on, ONDC. You see, if you see in the TV, Indianomics, everywhere, people what they say. So open network for digital commerce. Amazon, all these people, they are tagging to ONDC. Amazon, Flipkart, they are big players. They are tagging to open ONDC because it's going to become another big platform. Like with OCEN, Open Credit Enablement Network. Even a small Kirana shop can log in and all. From any bank is his choice. Everyone is offering a product and all. He need not go to his local banker and all. The choice is on the screen. And he will choose a banker at this rate, these are pricing and all, these are terms and all. He's going to choose. And the digital banking units are going to come. Where it is self-service as well as assisted mode will be there and all. Virtual digital assets. Many of the assets will become virtual. Digital, are we having capable to handle all these things? But now, broadly, if you look at it, what sort of broad areas a fintech is offering? If you look at it mainly, now the bankers are focusing on fintechs for the governance. Governance is a key. Which banker in the normal course, lot of energy and money they have to spend. KYC, compliance, customer engagement. It can be better experience, customer lifecycle management, credit decision making, risk management, early warning signals. So business enterprise solutions, how we need to finance an SME. In the normal course, a traditional SME cannot do. But fintech can get a surrogate data from different pockets and corners and all. They will give you a better underwriting skill. We'll be knowing more informed in what I'm taking a decision. In the normal course, what you say, I may not be able to finance. When they are getting all the data and giving you a decision-making tool, you will be able to finance that one, which you will not miss. Embedded finance you can do. Consumer loans, credit cards, insurance, wealth management, payment solution, cross-border. This list goes on and like this. Fintechs, what they can offer, they can partner with the bank. So what my feeling is, banker, instead of focusing themselves and converting themselves as a technology company and with huge investments, and continuously you are on a treadmill to upgrade yourselves. If you do not upgrade, after 2 years, it may become obsolete. So then again you have to invest, but they are on the job. They know. And as I nimble-footed people are there and all their job. So with these things, I feel rather than banker investing all these things, and banker need to focus on the customers, their experience. What is their expectations? How they can discuss with a fintech, how they can bring out a solution to acquire more customers and to more or less mind them and upsell, downsell, deepen. These things the banker need to focus as a financial intermediary. The banker's role is to bring capital, mobilize the resources from the system into the banking channel and all. Use it properly, where to lend. So that way, the data of the banks, many of them, may not be ready to straight away for a fintech to handle. So the banker's role is to how to restructure my data, which is making a future ready so that the fintechs can get something out of the data. Otherwise, it will be absolutely meaningless. So this is banker need to work on these sort of things rather than investing in so much of technology. I will do everything and all. A simple example, if you see, a lawyer is there. Before becoming a lawyer, he was a very good stenographer, excellent stenographer. He's the best stenographer. Then he studied law and he has become a lawyer. The two options for him, he can engage a stenographer for his work, or he himself can do his stenography. If he himself is doing his stenography, 3 hours if he's taking and all, and rest of the time he'll use for the law. So then he has to think, by 15,000 paying, taking a stenographer is better, 15,000 per month, or earning 10,000 per hour is better for me as a lawyer. Any prudent lawyer will feel earning as a lawyer is much better. My time has to be spent on that. He'll engage a stenographer. It is as simple as that. As a banker, what is your core competence? You look at it, focus on that, earn that and strengthen your position. There are many people to support you in and around. Why can't we take? Why should you go on continuously reinvent the wheel which others have invented rather than make use of that and focus on your for what you need to do. So that way, friends, what I said, competition, let us not get awed with this competition word. Competition is good for you. How we have cholesterol. So doctor comes and tells, no, you have more cholesterol. Then immediately we need to ask doctor, more of good cholesterol or bad cholesterol? If good cholesterol is there, good for you. Bad cholesterol is bad for you. So likewise, if competition is as good as if you look at it as a good cholesterol, you have to take it that way. So how to convert this competition is through collaboration. So finally, what we need to understand is collaboration is a new competition. Competition is a myth. If you collaborate with the partners, it can be NBFC, it can be FinTech, whoever is there and all, you will be a successful player. And your focus has to be, who is my best partner? There can be hundreds of partners, but that should gel well, and you must be add value to your people and all. If you are able to do this, you will be a successful banker. As a leader, our task is how to keep our eyes, ears open always. What is happening in and around, and do I have the first mover advantage? Or after 10 people doing 11th person, if I also go there and all, what is the thrill you are creating to your customers? What's the thrill? So the customer should get a feeling, this is the bank, I need to be with them. Because I need not look around what is happening and what is the best coming and all. My banker is on the job. He will bring all these things to me. So I am safe. I am safe. So once we create this sort of an experience by getting the best partner and taking them forward, and you need not worry about the competition. So thank you very much for the IABF for the wonderful opportunity they have given me. Sorry, I have crossed the time limit given to me, but I couldn't withstand myself. Few things what I had to share, I need to share. That is the reason I share. So thank you very much, Mr. Das, and the entire team of IABF for the opportunity.
Thank you. I think we have to have a part 2 because the way you have explained the thing for the people, because the things to come, I think they will be able to visualize after hearing from you. The companies, fintech companies, how you have to either compete or collaborate, what is going forward, the way for the NBFCs. As a bank, where do you stand now and how you have to move ahead? Because the change is so fast. It is said that if you want to stay where you are, you have to run.
Absolutely.
So hopefully the participants, let us hear from them. The forum is open. Let us hear from the participants. A few questions, sir, if you permit.
Yeah, please.
Good morning, sir. I have a question.
Please. Good morning.
Yeah, my question is on the co-lending space.
Okay.
So we know that KVB is co-lending with Cholamandala Finance, part of Murugappa Group in commercial vehicles and machineries. So my question is, there are a lot of advantages here in co-lending space. That's what we keep hearing in the market. But I wanted to hear from you, what are the challenges that you have faced in the co-lending market? Since there is no FLDG there, do you feel the ROA coming from the deposits, from the interest earning that you're getting from this space, is it good? And do you find a lot of delinquencies and how you're handling that?
Yeah, first thing what I said, the homework, what you do for a partner is very important. You need to look at their portfolio, past history. With these things, you have to choose a partner. So once you look at it, the second 2-3 challenges what you face, I'll tell you. The NBFCs, they are agile. They expect the banker also to talk in their language. They have to be agile and they have to have the speed. Many times the problem is the bankers will not respond in the same way because this is not a priority for them. So in the process, whenever they find time, they'll be talking to them. I find many of the NBFCs, they get suffocated. We have created a setup wherein one DGM sits in Bangalore looking after NBFC and partnerships, exclusive, so that he will be a one-point contact for me. NBFC should not get, or fintech should not get suffocated talking to all my people, technology, this business and all. So that is the first thing what we need to understand. We should not suffocate the partner. He need to get a feeling it is a cakewalk if we go there. And second thing, biggest problem is IT integration. They come to you. Okay, second thing is credit. They come with the norms and all. Your credit team will talk only in terms of the normal banking because they do not know what is an NBFC, what are the terms. They'll go on declining. So your risk team and credit team need to understand what is the order, how to manage the risk, how they manage the risk. We need to tell our risk team to go and visit their operation end to end, how they are managing their risk, how they are acquiring a customer. Once our people they see, the advantage is our people also will understand. And second thing, there is a better appreciation of the risk what we are taking. And with all these things, credit terms, everything is agreed. And the third thing comes the IT integration. There, each system, their system is theirs and our system is ours. If the IT people are not aligned, because business may have some interest to show the numbers. IT, what interest they'll have? They will talk all rules. That has to happen, this has to happen and all. Only they expect everything partner to do it and all. The partner will be fed up. If a big partner is there, they'll be able to spend time and all, energy and all. And NBFC otherwise coming and all. After some time, they will drop. They will drop. So my point is, the challenges are many. As a leader, how we are going to visualize, how we are going to streamline, and how periodically you are reviewing what is happening with various stakeholders, where it is stuck, how we can fix and even it out, and that comfort making both the partners, that is NBFC as well as our bank, together. As a leader, if you go on reviewing what is happening, in my case, I used to review partners what is progress every week. Every week. It is only for 10 minutes. I will tell them saying that at such and such date I am going to review. Let me be frank with you, 80% of the issues will be resolved. They will get a feeling during that review period, instead of this thing and all, we can tell all these are resolved. Automatically it will review. So, but just others should get a feeling saying that it is being monitored. And once the comfort is there and post integration, we need to be in touch again what is happening for 3 to 6 months. Integration is complete, everything is there, business is not happening. Business is not happening. The purpose of all these things is defeated. So hand holding and seeing, and after that what is happening until such time it goes to the logical and it becomes autopilot. It is the responsibility of the leader to take interest. Then only it will be through. Okay?
Thank you, sir.
Sir, I am Nitin Garg from Union Bank of India. Since you have seen both the worlds of public sector banking as well as private sector banking, what according to you are the top 3 challenges which public sector banks are facing, due to which they are not able to match the growth seen by private sector banks in credit? Particularly, they are growing at 25%, whereas public sector banks grow at only 12 to 13%.
No, I understand, because it is not fair to say public sector banks have no strength, they are not doing. You need to understand they have their own strength, but they have the legacy issues also. Because they need to, at one point of time, the government's expectations were there, they are doing the masses, what they support and all, the clients, what they do it and all. So many of the private sector banks, they may choose. They may choose a customer, the limits are there and all. The class of customer who comes to a private sector bank and all is something different, because if something a lower district comes up and all, he will be charged. So that clientele whom public sector bank he handles and a private sector bank handles is different. That's the first thing. So that way, so public sector bank, though they have the equal strength and all, because they need to deal with many people. In fact, I'll tell you, when I was in North, I had gone to a branch, and when I was about to enter into a branch as a general manager, I was unable to enter. Unable to enter and all, there are many people waiting outside and all. The branch man with me, I was trying to enter into the branch. Branch is not yet open. Customers said, no, come in queue, come in and queue. No, the branch manager said, no, he's a general manager. He has to go. Then after going into the branch, I asked him, you must be having a pretty good business here. You have achieved all your target by September. Then what he said, sir, this is all for the ladies who are pregnant and delivered. The government monthly payment, what we need to make, we are making. They will take the payment and they'll go. The branch is flooded. Normal customers are unable to come. So this we expect a private sector bank to do. The common service, social service, what a public sector bank is doing, you cannot expect enough. But with all these things also, the public sector banks, which so well they are quality-wise, if you see currently, the quality of public sector banks also, because the NPAs, growth, the ability to raise the money and all, many of the public sector banks, the CD ratio is around 70s now. Many of the private sector banks, CD ratio is 90 plus. Now the growth is coming at 20% and all. Challenge is for whom? Someone at 70% because 85% he can grow and all he can grow. Whereas the private sector, they need to mobilize deposits. Now I'll tell you the challenge for all the bankers is not giving money. 20-25% credit can grow. Over growing and all. Now the deposit growth is at 9%. The raw material is under constraint now. So every private sector and public sector bank is running after the deposits for raising the money. So the private sector bank, the agility is they can understand the customer. They can invest in the technology, right technology. The age profile of the customers is there and all. And they can extract for the people and all because hire and fire, all these things will be there and all. So with these things and all, so they may be a shade better. But the quality of the risk management, these things, if you look at it, and the stability, these things, if you look at it, public sector has its own strength. That way, there are good things in the public sector and a few good things in the private sector. The challenge for any banker is nothing is good and nothing is bad. So we need to take what is good and we need to have your own model and all, take it forward. You can create a niche of yourselves in your area of operation of the blend of public sector and private sector. Okay? Okay. Anyone else?
Yeah, Ravita, I think.
Good afternoon, sir.
Yeah. Another 5 minutes I have to move for my airport. Yeah, please.
Airport, yes.
Sir, good afternoon, sir. I am from Union Bank of India.
Yeah, please.
Sir, as you have very vast experience in public sector as well as private sector both, sir, do you feel that is there any difference between the attitude of the employees of the private sector and public sector bank towards the customer service? Because nowadays our bank is focusing too much. Our MD and CA is very much enthusiastic about customer service on this.
I'll tell you, there is a myth if you get a feeling. So there are laggards and underperformers in the private sector and everyone performs there. It's a myth. Once you get out and move elsewhere, there only you will find this mix is there everywhere. This mix is there everywhere. So it is for the leader how we are going to change the mix. The more and more people who are oriented towards the organization, who are moving towards the work culture and all. So this is more important. The orientation towards the customers is pretty good even in public sector and private sector. But as I said, the workload differs. The workload, suppose if you are doing for the micro also in a public sector, naturally the attention what you can pay towards a customer may be undergoing a change. Otherwise, the orientation, when I look at it, it is equally good there and all. And I cannot say that private sector is much better. Today morning, I was meeting a customer. They were moving from a private sector bank to us, big private sector bank to us. So the problem is they are saying the service levels and response levels are not good. Not good. They are telling that. So it is a myth we get a feeling. In public sector also, there are many pockets where service is pretty good. I'll tell you, I am in Coimbatore today. When I was in my earlier assignment, when we were trying to get a very big account and all, they were not even allowing to banker to meet. Then finally, we could get a clue and all, we would meet them and all after 6 months, 1 year. When I was transferred from Chennai, as a courtesy, I have gone and met them. The request made by that MD is, sir, if you permit, can we take this girl into our fold and all? I said, what do you mean by that? Sir, whichever position she wants in our organization, there are around 20 colleges. Whichever position she wants, we will give it. I said, that what is this actually? I'm unable to understand. They said, sir, very rarely we come across these sort of people. She is a branch head. So looking at her, we have moved from our existing bank. So that's what I'm telling. So if any time she tells, I want to shift, our doors are open. These sort of people are there both in public sector and private sector. Both. But it is a leadership. If the way we look at it, the leader gets a feeling, branding something, some organization saying that No, here nothing will move. Nothing will move. You can see in your own organization, the moment a person changes, it can be a division, it can be a zone, or it can be region, whatever it is there and all, you would have seen a sea change the way the division was functioning. The person makes a difference. How he is going to motivate the people, how he is going to create an orientation towards them and all. If that we can create, people will remember me throughout. It is just our mindset. If we get a feeling saying that, I was just sharing earlier. So Das was telling, when I took charge, I'm not saying I'm a leader. When I took charge of Chennai Circle, the circle was in 13th position. We were having only 14 circles in the bank. I asked my people, what is our rank after 15 days? They were hesitant to tell. They were hesitant. Then I asked, tell me what is the reason and all. Sir, our rank is 13, sir. I couldn't digest that. Metro circle with 13. With Kodaikanal, we had a conclave. I have shown on the screen. I said that I have only 3 slides to show. Entire team was sitting. I have shown them one slide 13. That's all. So I asked them, can we relate ourselves? And there was nothing, no one is speaking anything. Then someone said that, yes, sir, it is our rank. Then I said, no problem. Second slide, we have dropped 3 and we have retained 1 there. Can we aim for this rank? They were all thinking, how can we do it? How can we do? Is it ridiculous? What is the expectation of this man? Okay, dropped 1 and brought 3 on the screen. So can we aim for that? Yes, sir, we can try. What is 13? What is 3? Whatever it is. Then we told them these 2 days, we are here to think something out of the box, what blueprint we can prepare. Let me tell you, I didn't involve myself. The team sitting only, they have prepared the blueprint. And it was in November 2015. So by April, so December 2015, the Chennai floods were there. It was a big dampener. I thought entire planning has gone waste. But still people didn't lose their confidence. They were so charged. By April 15, 2016, Circle has reached 9th position. They have got confidence. From then onwards, by next September, it has reached 2nd position. 2nd position. That November 16, we had a conclave in Pondicherry. The first opening dialogue was, I understood all of you have scant respect towards your CGM. They were all surprised. Instead of praising this man, he's scolding us. And they asked, why, sir? I said that, what is the commitment you people have taken? Commitment taken is for the 3rd rank. Who asked you to bring it to 2nd rank? Because it's a challenge. If you come to 2nd rank, if you do not stay here consistently, people will laugh at you. Even a leadership or consistency performance is also there. It has to be because you are not on a treadmill. You are running on a floor or a ground. If you continuously run, you are not getting result and all, people will laugh at you. So the theme of this conclave is, where do you want to stay forever? At the end of 2 days, they have come back and told, sir, we have determined, sir, 2nd rank is our rank, we'll stay there. Believe me, 3 years, continuously Chennai Circle was in 2nd rank. Till such time I left. Autopilot. I didn't touch them. So they were only doing. They were so charged on their own, they were doing and all. And other circles were asking. Say, MD was telling, it is patented. That rank is patented for Chennai Circle. So can we say that this circle is useless? No. The same people, same public sector. So how we are going to orient the people, how we are going to take them, that makes the difference. If they believe you as a leader and something what he tells makes sense for us and all, and we will get recognition, we will get satisfaction, people will be with you. No doubt in it.
Thank you so much, sir.
Thank you. Thank you all. Thank you, Mr. Das, once again, and Ravita, for the wonderful opportunity and giving me an opportunity to interact with your people also. So I'm so charged now. I'll tell you, rather than me charging them, I am charged now. That's good.
Thank you.
Okay.
Mehrotra ji.
Yeah.
Please.
Respected Ramesh Babu sir, our CEO, Das sir. In fact, it is very, very difficult for me to summarize such a eloquent speech by our Ramesh Babu sir. You have touched upon almost all the areas of banking, particularly the leadership styles which are actually going to make a difference in the current environment. And the same people, the same kind of setup, same competition, but how the people can excel within that. And they actually break all the barriers. So that is the magic which a leader can create. And you have shown that actually everywhere, wherever you have been, sir. We have been very, very thankful to you for the kind of confidence you are reposing in the programs of our IIBF. We have conducted a lot many programs on leadership for around 250 officers of Karur Vysya Bank. And simultaneously on MSME, very actually novel program your people had asked from us. That was for the marketing and selling approach for the MSME and small ticket size of advances.
Correct.
So 4 programs we conducted at locational centers, and I think it has given us a lot of
Right.
learning
Absolutely.
by interacting with the people. And at Karur, at Coimbatore, Chennai, we conducted the program for KVB. So, sir, thank you very much. And our leadership programs also, which we have conducted as in collaboration with XLRI, your people have participated in a very big way. So, all the thanks to you, sir, particularly for that, and for joining today with us, giving us the privilege to listen to you. As our Das Saab said, there has to be a part 2 also, because you have actually concised so much these big topics like NBFCs and fintech companies, but the kind of understanding which you have provided, sir, that is actually even I was just finding you as the best of the faculties for these things. So because it is mixed up with the practical experience, and you have been handling from the top. You are seeing actually 360-degree view of all these things, which our participants will be largely benefited by just listening to you, sir. So thank you so much
Thank
for
you.
everything.
Thank you.
And
Ganesh,
we will be in touch with you, sir,
please,
for
please,
many more
anytime.
things.
We'll
Yeah.
be closely associated. And
Yeah.
Mr. Das and Mehrotra, so I'll tell you, I am envious about
Yeah.
the participants.
Yes.
Way they are getting this thing and all. So I couldn't get all these things and all. I should have been 30, 40 years earlier. I would have got all
Yeah.
these things. So nice, but whatever it is, God
Yeah.
is great. And take full advantage of what IABF is supporting you and all. It is
Thank
for
you.
your benefit.
Thank you, sir, so much.
Thank
Thank you.
sir.
Good day.
Thank
Good
you,
day.
sir.
to all of
Thank you.
Thank
Thank you, sir.
Good day,
Thank
sir.
you.
Thank you, sir.
Thanks a
Namaste,
lot,
sir.
sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you so much,
sir. Thank you, sir.
Thank you.
Thank you so much, sir.
Thank you,
Thank
sir.
you. Thank you. Good day to all of you. Thank you.
Thank you.
Thank you, sir.
Thank you, Das, sir.
Thank you, sir.
Thank you, sir. Thank
Sir,
you.
you have found out time actually, despite your traveling and busy schedule. Thank you very much, sir.
Yes, this series, leadership series, particularly Ramesh Babu, when interacting, lot many insights he has given to the
Yes.
NBFC sector and fintech sector.
Yes.
Let us hope.
No, actually,
Thank you.
this was
Thank
one
you
of the
so much.
best sessions, sir.
Thank you, sir. Thank you.
Thank you.
Thank you.
Thanks, Ravita.
Thank you, sir.